What is the most amount of work that you've ever done on one of your rentals while keeping that tenant in place?
They went up for a great reason. And just because you missed it, don't get salty with me. I was telling you in 2020 it was the second best year ever to buy.
What's the significance on the 2% target for inflation? Did anyone ever do a study about that? Is it the best rate? Why does the Fed target that 2%?
Alrighty, folks, this is an episode that I personally look forward to each week. Is quickly becoming a fan favorite. This is where the one and only Millennial Mike goes through a week's worth of comments and pulls out the spicy, the great questions, and maybe even some that he just wants to know the answer to. Here we go again, Mr. Millennial Mike. How you doing, man?
Oh yeah, this is great. Good to be with you, Mike. It's actually been a couple weeks, sadly, since I've last been here, and I've been missing out on getting the spicy comments in front of you so you can respond to them. And luckily, this week I got a couple of people who just really didn't like what you had to say. So we got some people calling you out on a host of different topics. Topics like, should you use a HELOC to buy rentals, or you're finally admitting prices are crashing, things like this. So the first question is going to be from a doomer or a crash bro type individual. It's a longer one. It's our longest question here, but I have to read the whole thing
Okay.
because you gave a good response. So the first thing that he left on one of your videos was, wait a minute, but I've been hearing on this channel for the past year that home prices would not go down at all. Now you're saying prices actually went down a few months ago, but not to worry about it because the price correction already happened. I guess you're going to keep moving the goalposts to adjust to the new reality. And this is from Willie ST8813. Your response was, I think you missed the point. This was new home prices only. My opinion on existing hasn't changed and hasn't been wrong yet. Here's the follow-up he had that you haven't responded to yet. He says, I don't remember you ever saying in the past that you were only talking about existing home sales. You always said transactions will crash, but home prices won't go down. Now you're changing your tune to, I actually meant just existing home prices wouldn't go down. You know very well that the decline in prices usually starts with the most liquid part of the market, which is new homes. Eventually, the low unaffordability will get to the existing home market when people have to sell. By the way, I'm not a crash bro, but I think that telling people home prices won't go down after they went up 40% nationwide in 3 years for no real reason is crazy but irresponsible. All right, that was a long one, Mike. What do you think?
So, a couple of thoughts. So, first and foremost, I guess he has kind of a sliver of a point. I've always talked about median home prices not going down, and I stand by that. I'm not changing my stance. What I will say is total home sales are this big. New home sales are somewhere between 11 and 12%. Historically, in today's environment, they're somewhere between 18 and 20%. However, the stat that he's trying to give me a hard time for is new home sales. And this was a conversation we had with Lance Lambert. New home sales are down 8.1%. But they're not really down 8.1%. The homes are smaller. So they're not down 8.1%. That's why talking about new home sales being down 8.1% is a classic crash bro tactic. And yes, I think this guy is a crash bro. At least he's a crash bro follower. Second, talking about, hey, home prices went up 40% in 3 years for no reason is irresponsible. They went up for a reason. Rates were at lifetime lows. Everybody buys based on payment. And nobody's selling. So they went up for a great reason. And just because you missed it, don't get salty with me. I was telling you in 2020 it was the second best year ever to buy. So if you were listening to a crash bro that was telling you not to buy because don't worry, prices will be lower later, that's on you. That ain't on me. Next thought, I haven't changed my opinion. Prices will be flat, all included. But you can't hear me say prices are going to be flat for the entire market, which is 4 million transactions, and then try to call me out for, 100,000 transactions. That's on you for not understanding the situation. So I haven't changed my opinion. I haven't been wrong. Just because something went up 40% doesn't mean it has to fall. I would argue people have been saying that for a year and a half, and they're still wrong. I believe we're going to have 2 or 3 years of a sideways market. Affordability is a problem. That's why we're going to do 3.7 or 3.8 million transactions instead of 6.5. Supply and demand is a two-step function. This guy gets demand is down. What he doesn't get, and all the crash bros don't get, is supply is also down. So we take the supply demand cross where pricing is, and we move supply this way and demand this way, and the price stays the same. Just because you don't like it or you don't understand it doesn't mean it's wrong. And just because I've called it, I haven't changed my opinion, and I've been right, doesn't make me an idiot. So I don't know what to tell you, bud. You're wrong, and I'm right.
The only thing we'll be able to do is just let time continue proving you right.
Yeah, I mean, I don't know what you need to do at this point. I mean, we're 18 months into this thing. Again, prices are going to be stubbornly flat. I mean, Zillow, I think, just came out and said prices are going up 8% in a year. I think that's idiotic. I think prices are going to be flat, not up, not down, flat, just so somebody holds me accountable for it later, plus or minus 1.5%, basically flat. So there we go.
All right. Well, moving on to the next question. This is a great one. This comes from CP-RC9SW. He says, when you have a good tenant in and the house needs big yet ordinary work, like a new carpet or something, how do you deal with that? And that prompted me to have the question for you, Mike. What is the most amount of work that you've ever done on one of your rentals while keeping that tenant in place?
Other than water leaks, I mean, I think water leak. I've had to repair or replace a bathtub and shower before. We've had to do some big things like that. In that case, the tenant gets moved into a hotel while we do that work. It's just faster that way. I would say kind of the normal things is, hey, let's replace the carpet in the kid's bedroom. It's bad, so the tenant, generally speaking, will move the stuff out. Our team will come rip it out, replace it. It's a 4 to 6 hour job. We've replaced kitchen counters a couple of times. That's an afternoon job. Yeah. We've replaced roofs before. We just did a whole apartment building for $60,000, but no tenants had to move for that. Mm-hmm. They had to move their cars because we were taking the shingles down. Yeah, I guess the biggest jobs often are plumbing, where maybe tenants have to be put in hotels just because the water's going to be off for a while.
Yeah, I was going to say the same thing. I defer most of the major maintenance while someone's in there. I got a video on my channel coming out tomorrow about a terrible combination. A slumlord and a slum tenant converged on my property that I purchased and now I'm remodeling. And it's got some deferred maintenance in there. But I'm with you. I mean, really beyond just ripping out some carpet, fixing any major emergency issue like plumbing or anything like that, I try to save the bulk of a remodel for after they've moved out.
Correct.
It's just too hard to work around, folks.
Yep, correct.
All right, here's another opinion question for you, Mike, and it's about college in 2023. So from Mr. Nice Guy 423, he says, as a millennial, I was fed the same go to college or else your life is over bull crap since very early grade school. They brought in college recruiters into the high school every year for seniors to entrap. I mean, encourage in college. It's a scam. A small percentage of my friends actually use their degree. The worst part is when I bring this up to my college buddies, they don't want to hear it because they would have to admit that they were scammed. It's easier to fool a man than convince him he has been fooled. Mike, is going to college in 2023 worth it?
I believe college needs to be looked at as an investment. You are essentially, or at least potentially, signing up for 4 years of your life. You're signing up for X amount of dollars based on the university you go through. That's your investment. I believe all investments should be looked at for your return. I think that's what's wrong today. Like this person, like myself, I was told if you don't go to college, you're a loser. Not quite that harsh, but basically. And a lot of people signed up for that without treating it like an investment. So they got bullshit degrees. They half-hearted it. They quit halfway. But the problem is you still lost the time and you spent the money. And now it's a horrible investment. So I believe that fundamentally college is looked at wrong. I think college, for lots of people, is an awesome investment. Doctors, dentists, lawyers, engineers, computer scientists. but not for everybody. I don't know what the ratio is, and I'm not going to guess. But I think if we were more mature and just had an honest discussion, I think there'd be a lot more 22-year-olds that have 4 years of experience being entrepreneurs than 22-year-olds with 50K in debt working at Starbucks. I mean, so again, I want to be clear. College is valuable if the return is there. I just don't think most people look at it that way.
Yeah, but those 22-year-olds working at Starbucks is my main dating pool. So if they weren't there, they weren't there for me to go to. So I'm grateful for that. All right. But I'm going to follow up with you, Mike. I'm going to follow up with you just a little bit. So my question to you, Mike, what do you think the main purpose of college is?
Wow, I've never been asked that question before. Well, I believe as college is done today, I believe the main job is to produce employees. I think that's
Okay.
what college does today. What it should do is it should be the next step to a better, a bigger life. It should be that return. I'm going to invest X for Y return in Z time frame. Today, it's about producing employees. That's what I think college is today.
So producing employees, and I agree with you there. I definitely think that is what it's set up to do. But isn't part of the deal that is sold that if you go to college, you'll be turned into an employee, but you'll be an employee who can command a higher wage? Isn't that really kind of the come do this with us and you'll make more money in the long run?
Again, that's kind of the story that the salesman is telling you. When I was coming up as a Gen X, they actually had charts that showed that, right? High school dropouts make X, high school graduates make Y, college grads make Z, masters makes, Z plus. Today's world, I know plenty of people that have high school diplomas or even GEDs that make great money, right? And I don't think it's as black and white as it was 30 years ago. When I was 18, 20 years old, I think the statistical data was probably pretty accurate, right? If you didn't have a college degree, you couldn't get interviewed. Today, you have a social media presence or you have proof points. I mean, I want to be accurate, so let me think for a minute. I probably interviewed 250 to 300 salespeople and first line managers over the last 5 years of my career, maybe even more. I never once looked for college degree. Didn't matter. In fact, one of my, shoot, I don't know, the three off the top of my head of my top 10 sales reps didn't have college degrees, or at least maybe they had some college, but they didn't graduate for whatever reason. It's not required today. It was something sold that has been proven wrong.
I think it's funny that you started by talking about how college is an investment. I think that's a very interesting way to look at it because a lot of people would say the same thing about Bitcoin. A lot of people would say the same thing about a stock that might be pumping up. Oh, it's an investment, even the housing market. But what is the problem with these investments? As they become more and more popular, as everybody starts to hear about it and jump into it, it drives the price up. But then usually there's some sort of crash and that value comes crashing down as too many people get into it. And I think college is sort of the same.
I believe Gen X, and again, I can only speak for my experience. We were at the forefront of that, and we were sold a bill of goods. And there are lots of people probably that still have student debt from graduating 20 years ago, and that's unfortunate.
Mhm. Yeah. On average, it takes 19.7 years to pay off your student loan debt on average. The last thing I'll say is I think college is kind of a monopoly. In my personal opinion, the only way that it can exist is because the government has said, we are going to give an 18-year-old child $100,000 over the course of 4 years to attend a four-year university. And they will not loan that type of money if that 18-year-old said, I want to open a business or said, I want to go to some sort of mentorship program and get into one of the trades. Now, maybe if you go to a trade school, but not if you just wanted to go to a trade. I think it's because that money and that loan exists within a vacuum. That is why college has the ability to propagate to the level that it's at. If you could go get that same loan at 18 years old to start a business, I think there would be some changes in our society.
I think the financial system is grossly mismanaged, and the incentives are not aligned with what I would do if I was in charge for a day.
Well, I know we just spent like the last 5 minutes crapping on college, but now we're going to go to somebody who has a college degree and ask Mike, the economics professor, this question. So this comes from Sean Z. Howe, 7525. He says, what's the significance on the 2% target for inflation? Did anyone ever do a study about that? Is it the best rate? Why does the Fed target that 2%?
So I'm sure there's been plenty of studies on it, but kind of at the our level, you want some inflation, right? We are a debt-based system. Some inflation is good. It allows you to use it to kind of pay off your old debts with new money. So some inflation is always good. What they don't like is where inflation gets to a point where it just kind of builds on itself and it falls away too fast. So there's been some talk about 2% being the kind of the comfort level. I think what's most important is the 2% metric has been around for a while. And people may not realize this because we've been in this, high inflation environment for a long time. There were years, it might even be a decade, where inflation was sub 1% and the Fed was trying to goose inflation. Right? It's trying to get inflation up, not down. So I just think it's a standard metric that people are comfortable with. Is it hard and fast rule, some kind of economic theory? When I got my degree, which admittedly is over 3 decades ago, I don't remember ever talking about inflation targeting wasn't a thing in the 90s. So I just think it's become a rule that they kind of standardized.
Mike, don't remind me that the 90s were 3 decades ago. I still think that they were only like 10 years ago, so you're breaking my heart. Okay, back to some heat from the comment section. This one comes from Sammy Davis 707. You were doing a video about recycling capital, and they wrote, get a HELOC to put a cash offer? I'm turning off this video. So Mike, do you think they're being a little aggressive? Is it okay to get a HELOC to put a cash offer on a rental property?
Well, first off, you have to have a plan. I know exactly which video this was from. I don't think HELOCs are right for everyone. In fact, I've said I think HELOCs are wrong for most people because most of you aren't disciplined. But I've used a HELOC. I used a HELOC to buy 5 or 6 properties. Every time I used it, I didn't buy anything else until the HELOC was paid off. My goal was to have the HELOC paid off in a year or less. If you are broken like me and you can follow a plan and execute that plan, why not? I think what this person was reacting to is more debt. I agree. I think most people should never use a HELOC. Absolutely. But for some of us, it was an outstanding tool, and I wouldn't be here today without it. So if you don't want to watch, don't watch. It's okay.
Yeah, I've done a HELOC to do the burst strategy now 4 times. And if I hadn't used my HELOC, I wouldn't have been able to do it. I was able to buy cash, pay for the remodel, then refinance out into a cash flowing property and get my money back. And I'm on the 4th iteration of that. So for the right person and the right deal, it's a really powerful tool and I love it.
How long did it take you to pay them off?
So it was just a 6-month time frame for the first 2 for the HELOC because you had to wait for the seasoning period to be over. And then on the last 2 that I've done, what I did was actually brought in private money to change it out. So I closed on the property and did a double close where the day I closed on the property, I closed on the private money. So I closed on it with my own cash from the HELOC, but then boom, paid it back. And it, took a couple of days for the transfer to occur. But, within 3 or 4 days, I had the HELOC paid off.
HELOCs are a wonderful tool if you know how to use it. Most folks are not disciplined and they will buy dumb shit with it. So if that's you, you should be upset and shut off the video. I'm not that person.
All right. Proof, Mike, that you're hiding your fear. So this one comes from Royal Fizbin. He says, what I do not get is if the real estate investors who already have their portfolios are going to make money regardless of what happens with interest rates, because cash flow is cash flow, why do you even care about interest rates so much? Why do you talk about it so much? Is there some underlying fear that these guys, Dion, the guy with the beard, and the rest of them aren't vocalizing? First of all, you all have beards. So,
Yeah.
and Dion's is like the shortest, probably. Anyways, so what's your fear? Why are you talking so much about rates? Are you just trying to cover up for how insecure you are, Mike?
I just love how people, yeah, whatever. People are weird. So first and foremost, I think there's a couple of things. Higher rates does absolutely nothing to my portfolio. I have fixed rate debt. Over 95% of it's below 4. I think I have one at 5 1/8 or something. So I don't give a shit if rates are fucking 50%. It doesn't bother me at all. My debt's fixed. Second, the reason I talk about rates so much is because there are idiots like this person who get scared by higher rates. And I love that. I love the fact that there are people that are going, oh my God, it's 7.5. I'm not doing anything. Great. Go sit on the couch, do nothing, keep your head in your hand. I will write offers 30% below list. I will do deals that cash flow at 10% interest, and I will just keep rocking and rolling. The reason I talk about rates so much is I want people to realize that high rates are a good thing if you're not a moron. And you could use them to get some great deals at existing rates. It is so uncomfortable for people to understand. It's why I have to repeat it. Most people like high rates bad. I'm like, no, high rates good because half the idiots leave and I have less competition. And high rates, if you're a seller in a high rate environment, right, the highest rates since 2005, you probably have to sell for a pretty good reason. And I'm going to write a disrespectful offer and we're going to see if it makes sense. So I think high rates are wonderful. A, they don't hurt my portfolio at all. B, they create more renters because more people can't buy, so rents go up. And C, I have less competition, and I'm not afraid to write a disrespectful offer. So that's why I talk about high rates, because I think high rates are a good thing.
Mm-hmm. Well, high rates is going to give us the opportunity to talk more and lean more on seller financing, which we have an entire video we're going to do as its own separate video coming up next. And for the record, I did just put another seller finance deal under contract a couple days ago, so maybe I'll get a chance to brag about that.
I like it.
Okay, the last one, another spicy comment. This one is from 9DD Anino. Now you guys sound like the crash bros with recessions, bank failures, etc. Just say that it, being subject to deals, it's not a strategy that you're well versed in or not for you. And that's it. Not every method has to be applied to make money in real estate. You guys are more what I call a traditional RE investor, and that's okay. And this was on the topic of subject to deals and how none of you guys had done them before. So Mike, are you just afraid of subject to? Is that what it is?
Not at all. I've told Pace Morby directly. I was on his Sunday service video 2 years ago, I think, that I thought subject to was going to have a repeat of 1981 and 82. It came to fruition. But to this guy's point, it's a tool that I don't have in my tool belt. So what am I supposed to lie and say I've done it? That's not who I am. I haven't done it. I have investigated it. I built a portfolio without it. I mean, I don't know what this guy wants. If somebody asks me a question, I'm going to answer it. I'm not going to hide or lie or worse off, talk about what I read on a book. That's not who I am. So I've not done one. Will I ever do one? No idea. But I do think it's worth investigating. I think it'll have a good run the next 2 to 3 years. I just heard from Anna Kelly. She's assuming a loan from a bank. I think it's a VA loan. We'll talk more about that on Wednesday. But low rates are an asset. And if you can get some of those in a high rate environment, why not?
Well, Mike, those were all the questions that I had for you today. We have a bunch of videos we're going to be reacting to coming up in the following segments. As I mentioned earlier, seller financing. The one final thought a commenter had for you, and I want to know what you think about this nickname. Somebody said you're now going to be considered the real estate Heisenberg. So how do you feel about that?
I'm not. I don't know what that means actually.
I didn't know if you get the reference. So it's from the TV show Breaking Bad, where the main character refers to himself as Heisenberg, and he is the meth cook king of New Mexico. I don't think you're cooking any dope, Mike, but
no, I never saw Breaking Bad, so I
it
guess
was
it's
meant
okay
to be a compliment. I think that you know what you're talking about.
yeah. I actually there was another one. It's funny. I got the other nickname I got this week was the Carpenter because I nail it so often.
Oh, I must have missed that comment. Nice.
Yeah.
I like it.
Yeah, I
it.
like that one, the Carpenter, for nailing it so often. I thought that was pretty good. Mike, it still amazes me that you're willing to go through your comments. I love all the spicy comments. Some of them get me to react, especially when you give me 3 or 4 in a row. My blood boil goes up a little bit. So this is fun, man. I look forward to it. Thanks for all you do.
Yep.